Hey, what's up everybody? It's Tuesday, November 12th. Stock market making new all-time record highs. Oh, I told you. And it's going to keep going. Yes, we're going to have corrections. No doubt about that. But let's refresh. The underlying, I guess, fundamental support to, and really this goes to everybody, all the very smart people out there on Wall Street and all the very serious people in the analytic and the economics profession. Oh, we've never seen an economic expansion this long, and we've never seen a market rally this long. Now, I have gone over this so many times. This all goes to the fiscal flows, government spending. And I told you, why has this been going on since 2009? Because in the financial crash, when government ramped up its spending from historically what used to be around 2.5 trillion annually, in 1 year, it jumped up to over 4 trillion. So that was what? A 60% increase. That would be as if last year they spent 5 trillion. Imagine a 3 trillion, and last year, by the way, was a record. You had an increase of 300 billion over fiscal year 2018, 300 billion. That is a big annual increase. But imagine if it was 10 times that amount, 3 trillion. That's actually what happened in 2008 to 2009. And since 2009, that 4 trillion is like the magic number, man. I don't know if it's still the magic number now. I mean, the magic number now is probably in the high 4 trillions, 5 trillion. We did over 5 trillion in the last fiscal year, which concluded September 30th. And this year we're going to be up again. As a matter of fact, we're up already. If you look at comparisons year over year to where the spending is right now, we're just beginning the new fiscal year. It is up already. So all of these other things, and I've been telling you going back, I mean, we're almost a year now, the 1 year anniversary of that big market correction that started last November and lasted into December all the way until Christmas Eve. We had that plunge, it was like down 600, and then the market started up. And I kept telling you, you can go back. You can go back and look at my videos during that time when I said you got to buy that correction, you got to buy that correction. I was talking about so many things. Bank credit, not just expanding, but accelerating. You know, there was just a bunch of things that I was looking at that time, and I was explaining how there was no indication in the real economy of any contraction whatsoever. And, you know, I've been on record with the recession call. It's not going to be a recession. The whole inverted yield curve thing where everyone went crazy about that. The inverted yield curve is going to be a recession. I said, you gotta ignore that. And the reason for that, which I made that video yesterday, the reason for that, of course, was the debt ceiling, or the debt ceiling compounded. You know, it started off, I guess, with the Fed saying that they were going to stop the rate hikes, and then that anticipation towards rate cuts and the ending of balance sheet roll-off, and then the debt ceiling hit. And all that stuff was a technical condition, a monetary condition that caused that big distortion in the bond market, the distortion in the yield curve, and everybody looked at that and said, oh, that is it, that's predicting a recession, imminent recession. I said, no. And we had the trade war. Every time Trump tweeted something, trade war, even when things actually were enacted, tariffs. I said, you got to buy into those corrections. I went through the numbers. I went through the numbers of how that would impact the economy. And I tried to explain to you and show to you how the effect would be minimal, and over the long term, actually, it would accomplish what he was trying to do, which was just a redistribution of, production. No, I mean, the money doesn't fly out into outer space. Somebody gets more income and less goods, and the other side gets more goods and less income. All right? Very simple. All of these things. I mean, we have a new scare now. The new scary thing is the Hong Kong protests, the Hong Kong riots, right? I mean, the media is trying to throw stuff up there all the time, and they have been trying to throw stuff up there all the time. And I said, how many times did I say you cannot trade headlines? When I think back to last November and December and how many people who were subscribers who panicked, freaked out when the market was going down. This is the classic, folks, this is the classic reason why people don't make money in the stock market, why they don't make money as traders. I mean, allowing your emotions to take hold, scaring yourself, looking for, trading in a way that you require absolute precision. You can't do it. I said so many times that the quest for perfection, the quest for exactness, the quest for absolute precision. I gotta buy just right here. I'll put my stop one tick below, or that is a destroyer of results. I have people crying, just S&P at 3,100 now. We're going to keep going up. The main underpinning of this economic expansion and ultimately the stock market's continued rise is based on these fiscal flows. I mean, even the other MMT people don't even understand. Well, if they understand it, they are completely ignoring it. Like I said yesterday, there's a major guy out there who was one of the founders of MMT who's been bearish for 5 years. Not looking at these massive flows. So yeah, this is the core of what I do. And of course, attached to that, really the most important thing, if you're going to trade and invest, it's the mind game. It's the mental stuff. It's having control over your emotions. It's not letting the market dictate your results. I've said it many times before that if the market were a living thing, if the market was a person, its job, its function would be to make you mess up, to fool you, to trick you, to play with your mind. And it would be absolutely proficient at doing that. You can see how people behave. And they allow the market to influence their behavior. And that ultimately leads to poor results. It leads to ruin. Now, if you eliminate that part of the process, and you put yourself in control as opposed to the market being in control. Market cannot do anything to you. You do whatever it is you do to yourself. So yeah, here we are at all-time record highs. I'll make one comment about gold. Gold probably going to trade down to 1,400. If you remember back a year, 2 years ago when we were seeing all that consolidation in the mining sector, you had large gold miners acquiring other gold miners, and they justified those and by the way, when all that was going on, we had gold trading $1,150, $1,200 an ounce. Those companies, and you have to really listen to these the producers, the entities that are involved in the actual physical production of these commodities. They are very, very savvy and knowledgeable when it comes to their businesses. and the price and the value of the commodity that they are working with. And when they said at the time in those all of those consolidations, they said it justified a $1,400 gold price, and we were trading $1,150, $1,200, and it shot up to over $1,500. So now we'll pull back. That $1,400 now, or maybe slightly below, represents a long-term price floor for gold. So if it goes down there, that is an excellent opportunity. And again, you know, if you're looking to make $1 zillion tomorrow or next week, you're in the wrong game. Go to Vegas, roll some dice. It's not what this is about. All right, everybody. See you later. Bye-bye.